Good evening, friends, our colleagues, our clients and partners. Very warm welcome to our webinar at IIFL. This is the first pre-budget event what we have organized for the year, and along with us we have Mr. Pankaj Murarka. He's a founder of Renaissance. Pankaj sir,
Yeah,
I hope I'm audible.
I'm there. I'm there.
Yeah. So I'll just any introduction not required for Mr. Pankaj Murarka state. I'll give it to in brief. He's a founder, co-founder of Renaissance. Renaissance manages Renaissance Investor Advisor manages our three portfolios, which are currently available on both small case as well as the wellness platform. And we have here, sir, to give us a brief guidance about our pre-budget, overall market, and the portfolios per se. Over to you, sir.
Sure. Thank you, Viral. Good evening, friends. Thank you all for taking a valuable time out and joining us this afternoon, evening. So maybe let me begin with giving you some high-level overview start of the year. So I'm sure all of us are looking forward to in terms of how should we approach equity markets this year. And obviously, at start of the year, we have one big event in India. First day of February, we have a budget as well. And becomes there's a fair degree of this time it becomes slightly more interesting because one, this is the last budget of this government probably before we get into election cycle next year, because next year most probably will be vote on account. And given the fact that last year has been a volatile year for equity markets, there has been a fair degree of anxiety in terms of how should one approach equity markets. So I thought I'll take this opportunity to share my view both on equity markets and budget and probably how should we approach this year. Because medium term, long term, all of us are always bullish on markets and on Indian equity markets. Yeah. So maybe let me begin with this at a very high level, friends. Obviously, I think by now all of us know and clearly understand that India is a outlier economy in a world which is extremely challenged. Last year was a true testimony to that because the world went through significant challenges, starting with rising rates in US, where last year same time rates in US in January of 2022 was 0%, and today January 23. The interest rates in US are at 4.5%. So obviously, interest rates have gone up, or US central bank has increased rates by 4.5% in one single year, which has not happened in the last 40. Last time it happened was in 1981-82. So it's not happened in the last 40 years. So it's been a very unprecedented year in that sense. Also, the Russia-Ukraine conflict, when it started, we thought it will be first, we thought that Russia will overpower Ukraine and will finish this whole whatever so-called war in a week, 10 days or 2 weeks and all of that. And then we realized that Ukraine could put a strong resistance, and then we thought there will be a truce or a ceasefire some point of time in 2-3 months. But now we realize that it's been a year and that still continues. Despite all of these volatilities, India has clearly stood out last year. Also, last year, significant part of last year, we've had for first 6 months or 7 months of the year, we had significant FII selling into Indian equities, something like close to about $38 billion from August of 2021 till July of 2022. And despite that, the fact remains that Indian economy could take all of this into stride, and we still, when we end this year, we'll still end this year with about close to 7% real growth, which is probably the highest amongst all the major economies in the world. And despite the FI selling, our markets still did reasonably well, where our markets were still up 4% last year compared to every other world market, which was down anywhere between 15 to 20%, including the US markets. The question is now, where do we go from here? Because those uncertainties in terms of Fed raising rates or Russia-Ukraine conflict, high inflation continue to be there. So then how do we approach equities? And there's some degree of anxiety around that. So first, at a very high level, friends, I think that this year, 2023, will be a mirror image of 2022 in exactly the opposite direction. So all that macro headwinds that were there in 2022 will reverse in 2023. So, for example, 2023 was all about rising inflation and inflation rising very sharply. I think we are near peak inflation now, or in fact, we have passed the peak inflation. And 2023 will be a year where inflation in India and worldwide also will start coming down or will start moderating. So we'll have lower inflation and softening inflation this year as opposed to rising inflation all through 2022. Likewise, 2022 was about rising rates. All of us know, as I said, US central bank has raised rates very sharply and across the board. Central banks across the world have also raised rates. I think in the first part of this year or first quarter of this year, probably by March, US central bank will go on a pause. And probably in the last quarter of this year, that is October-December quarter, I am of the opinion there will be a rate cut also from US Fed. So while 2022 was about rising rates, 2023 will be about flat rates and then declining rates. And I think in India also probably later half of the year we should expect some softening in rates by RBI towards the end of this calendar year. So again, exactly opposite of that. Likewise, 2022 was about strong growth in US was very strong, and which is why Fed was raising rates so sharply. 2023 will be about slow US growth. US growth has slowed down and will continue to slow down during the course of the year. And US probably, in all probability, will slip into a recession also in this year. And 2022 was also a year where, because of strong COVID controls, Chinese growth was extremely sluggish and slow. Now that China has made a complete U-turn where they have completely opened up their economy, I think 2023 will be about strong recovery in Chinese growth. So probably post the Chinese New Year, which is towards the end of this month, from March onwards, we should expect a very strong growth recovery in China, because China has been into a COVID-driven lockdown for almost now 2.5 years, and they are just opening up now, which is why there's a widespread infection of COVID currently in China. But I think once they get into herd immunity and improve vaccination levels, probably middle of the year onwards, we'll see a very strong pent-up demand from China across the board for goods and services. So in a way, the point I'm trying to make, friends, is all the macro indicators that were headwinds last year will turn around this year, and some of them will actually become a tailwind also by the time we reach the end of the year. Some of these headwinds did have some short-term impact on India's growth also, because when the world slows down, it impacts India to less extent as compared to all the other major economies in the world. But nonetheless, it has some impact. So it had some impact on Indian economy also in that sense. And I think all of that will turn around. And despite of all of these challenges, all of us know that India has continued to do very well, because their economy continues to remain fairly resilient. And that's primarily because, one, we have very strong domestic drivers of growth within our economy, and secondly, the fact that fact that our export economy is also doing strongly, is doing very well, and has done pretty well. Last 1 year, exports have grown significantly. China plus one, where all the global companies want to move their manufacturing away from China, has become real. And more importantly, government of India has taken right policy initiatives in terms of production like incentive schemes. So now we're clearly seeing a shift of manufacturing from from China to India, and all the large global companies want to do that. They want to move their manufacturing away from China to India. So I think, and classic example is, you look at meaning the largest consumer product in the world is Apple iPhone. So until now, 90% of Apple iPhones are manufactured in China, and India had zero share. This year, India will be about 5% of total Apple's global production will be made in India. And probably in the next 4 to 5 years, we'll go to as high as 30%. which effectively means a meaningful part of iPhone production will shift from China to India. And I just took iPhone as one example, but I think something like similar is happening across the board in many other industries, and which is going to drive a very strong growth in India's manufacturing. So in that sense, I think, India is in a very sweet spot at this point of time, and we are in a situation where we're going to see a very strong uh, job-oriented growth in India, driven by PLI schemes, Make in India, which will drive India's manufacturing, China Plus One, where all the global companies want to move their manufacturing away from China to India to reduce their dependence. There's a very strong recovery in the domestic economy and the domestic real estate sector as well. And all of that are going to help aid, drive, accelerate India's growth. And India clearly has emerged as a, if I may say so, an oasis in the world, where when the world is significantly challenged this year, 2023, about 60% of world GDP will be into economies constituting 60% of the world GDP will be into recession. And despite that, India will still continue to deliver positive growth and healthy positive growth. Even if we grow at 6.5% this year, where, as I said, 60% of the world, including US and most of the Europe, will record negative growth. That's a very strong growth in a world which is so challenged. So I think in that sense, India is a very sweet spot in terms of how we have been. Also, our challenges or problems we face are much more controllable or manageable than what the Western world faces. For example, in inflation in US, you look at inflation in US, their target is 2%. Current inflation in US is 7%, 8%, 6%, between 6 and 8%. And in India's case, where RBI's band for inflation is between 2 and 6%. Just day before yesterday, we had the November inflation numbers, and we were at 5.72%. So very much within the RBI's target range. So in that sense, we have done a far better job in terms of managing our macro economy and managing the challenges emerging out of COVID. And Western world, US, Europe, again, they had done a huge fiscal expansion during COVID by giving free checks to their people across the country and all of that. While India did fiscal expansion and did help or lend a lending hands to the poor people, but we did not go overboard. We did it within some limits in that sense. So our fiscal deficit, which the government had targeted for this year at 6.4%, is much more reasonable compared to most of these Western economies. And given the very strong growth that we've had this year, government will stick to that, will very comfortably achieve that 6.4% fiscal deficit. In fact, given the strong recovery in the economy, the tax collection that this year that the government is going to see or has witnessed is significantly higher than what the government is targeting. So there is an excess tax collection of something like as good as about over 150,000 crores that the government has experienced. And government is used that to pay up for some of the other subsidy bills, including they've extended the food subsidy program till December, and then there's been a higher fertilizer subsidy because of rising fertilizer prices globally because of the Ukraine-Russia conflict. And government has not put that burden on the farmers, but government has absorbed that extra hike in subsidy prices by giving extra subsidies. And despite doing all of that, the good thing is that India will still achieve its fiscal deficit target of 6.4%, which the government had laid out in the budget last year. And mind you, when the government presented the budget last year, no one anticipated, including the government, that there will be a Russia-Ukraine conflict, and because of which food prices, fertilizer prices, and commodity prices will spike very sharply through the year. So that was not anticipated, but good thing is that despite all of this, and because of that, government had to incur higher expenditure. The strong growth in the Indian economy helped offset those higher expenses, and yet we could stick to we should be able to stick to a fiscal deficit target of 6.4%, which is very healthy from an economy perspective and from a fiscal management perspective. Second point now, coming to in terms of what should we expect from the budget? General expectation is that this is the last budget, so government will do some populist steps and stuff like that. I think that is not the case with this government. Now seeing this government for last 9 years that all of us have seen, one thing I found is that this is a government which is extremely disciplined when it comes to fiscal management. They never go overboard or in terms of overdoing things. And they've been, as I said, fairly responsible and disciplined about whole fiscal management exercise. So I don't think so that the government in any way will do significant populism or something like that at the cost of fiscal discipline. And I firmly believe that given, as I highlighted, India is in a very unique position from an overall growth perspective when the world is challenged. I am of the firm opinion that this will be a very strong growth-oriented budget. Government's focus in this budget will be to enhance and accelerate India's growth over the medium term to long term, which effectively means there'll be a significant emphasis on new investments and capital expenditure in the budget. Even in last budget, the total investments or capital expenditure of the government was up by 26%. And I think we should expect a high teens, mid to high teens growth in government's capital expenditure or investments. And I'm sure all of you all will understand कि जब गवर्नमेंट सब्सिडी देती है तो वो पैसा कंज्यूम हो जाता है, खर्च हो जाता है, उससे इकोनॉमी को कोई बहुत ज्यादा फायदा नहीं होता है. पर जब गवर्नमेंट कैपिटल एक्सपेंडिचर या इन्वेस्टमेंट करती है, सो दैट इन्वेस्टमेंट क्रिएट्स जॉब एंड इट हैज अ मल्टीप्लायर impact of the economy because it creates multiple jobs down the line. And it has a multiplier impact, as I said, on the economy. So I think this budget will be a growth-oriented budget like the previous budgets of the government. And there'll be a significant emphasis on some of the key sectors. Infrastructure will remain at the core of it because as a developing country, India will have to continue to keep investing into upgrading and building our infrastructure. So last 20 years, I'm sure all of you will appreciate that we have made significant investments in our road programs, and which is why our national highways, expressways are in a phenomenal, meaning we have phenomenal road infrastructure, especially intra-city and within cities as well. And we have some phenomenal national highways, expressways all across India, and that program continues. So roads will continue to remain a primary program for the government, but this time I think the government will continue with this tradition with making a strong investments in railways also. Because bear in mind, Indian Railways is the largest railway network in the world. Almost 70% of the India's population uses railways. They have 1 billion passengers every year. And for that kind of network, obviously we need to invest into upgrading that and making it far more better, efficient for all of us. And railways effectively means significant amount of investments over the next 20 years to modernize and upgrade Indian railways, including introduction of new trains is just one part of it. And be it, government has started with this various set of trains, including the Vande Bharat, and hopefully we'll have next 3-4 years, we'll have some bullet trains also running between some of the intra-cities and stuff like that. We are creating dedicated rail corridors, like we have dedicated freight corridors. We are now creating dedicated passenger corridors in the rail where we can run high-speed trains for passengers and stuff like that. So railways will again be one of the big thrust of government in terms of investments going forward into this budget. And likewise will be ports as well, because I think as India grows, our international trade will expand big time, and which effectively means we need far more efficient ports and far more, infrastructure around our ports. So I think all the three legs of transportation infrastructure, be it roads, railways, and ports, will be at the center of government's whole investment focus. And apart from that, I also believe that there'll be a renewed and continuing emphasis on indigenization of defense manufacturing in India. India is amongst the top 5 countries in the world in terms of annual defense budgets. And the fact is that we import 80% of our defense equipments are imported. 3 years back, India started this effort to indigenize our defense. and we have taken some meaningful steps in the last 2 or 3 years. And I think that's a continuing process where we need to reduce our dependence on exports and create a domestic manufacturing base for defense. So I think indigenization of defense and sourcing more of our requirements domestically, and more importantly, exporting some of the defense exports, exporting some of the great products that we manufacture in India to other countries, and making defense as an export sector, have seen, meaning government has put thrust on it in the last few budgets, and I think that thrust will continue. So that's another thing that one should really look forward to in the budget, including emphasis on make in India. So on the populism side, on the policy side, friends, government has already, I think government has done some part of it even before the budget itself. They've done it, where I'm sure many of you are aware that government has made this whole public distribution system completely free. So earlier, every family below the poverty line and below thresholds used to get some ration, including rice, wheat at subsidized price of 3 rupees, 2 rupees, and 1 rupee. Now that's become free from 1st January. So I think I don't expect any significant populist measures in that sense from the budget. Whatever they had to do, they've done it before the budget. And what happens with this government is what we have seen in the past also, that they do policy action or reforms not only in the budget, but they do it all through the year. And because they believe policy making, meaning budget is just one policy document or policy announcement, and from a government point of view, they keep doing things all through the year, which is why I think some of these significant things could just happen outside the budget. One of the big things that could be relevant from a financial market and a capital market perspective is probably divestment of IDBI Bank. Please bear in mind that since the bank nationalization in 1949, we have not, government has never ever sold a private sector, public sector bank in India. This is the first time we've been talking about, we realize that now government does not need to be in banking. It's a very large sector. We've seen what happens when the government is a majority holder in these banks, when they go through a huge, meaning the banks are not efficiently managed. They went through a huge bad loan cycle 5 years back, and taxpayers' money has to use to bail out these banks, which is not the good use of taxpayers' money. And because there's enough competition in banking space, there's no need for government to be in banking in that sense. And I think if IDBI bank divestment happens, I think that will be a very big event in that sense for the whole banking sector from a capital market perspective, because this is the first time India will privatize a public sector bank, which has not happened in the last 60 years. Obviously, last year government privatized Air India, so that was a landmark decision and a landmark privatization. And I think apart from IDBI, they might do a few others also during the course of this year. So there's a high probability, while government has been missing their divestment target for the last 3 years, whatever they've been projecting in the budget. But this time around, in the next year, with this IDBI bank as a one big transaction, I'm sure they'll be able to meet their divestment target, whatever target the finance minister likes to adopt or keep, maybe most probably around 100,000 crores. But I think she'll be able to do it with this IDBI bank divestment, because IDBI bank and there are a couple of other transactions lined up. And I think they have very deep strategic reforms in that sense, because that gives a clear message that the government is here for business and they don't want to run inefficient companies. And government also realizes that a lot of these companies are better off in the hands of the private sector. Other thing I can just clearly bring up is I think there'll be further momentum or thrust on the production linked incentive scheme. What started as a scheme for incentivizing setting up new production in India and exporting out of India. Government has expanded that scheme across so many other sectors, and now it's launched across 15 other sectors. Total investment is very significant, and this one PLI itself, and I think more sectors will be added to this, and there'll be renewed thrust on this whole Make in India and production linked incentive scheme in the budget. And our assessment is that all the new manufacturing that is getting set up because of PLI, that itself can add about 0.8% to India's GDP in FY25, when all of this manufacturing reaches its peak potential, and probably can create about 4 million jobs, which is very significant or very meaningful from overall contribution. Because one single policy initiative of the government of India, if it can add 0.8% to direct GDP, and then there is significant impact because of the trickle-down manufacturing impact of ancillaries and all of that, because of multiplier effect, the combined effect on the economy is very meaningful, very meaningful. Like I was highlighting that China plus one is real in that sense. India's services exports, which meaning India's market share in services export is about 4%. And over the next 10 years, given a lot of companies want to set up their back office and R&D in India, that will grow to 6.5%. And likewise, India's share in overall world goods export is just about 2%, which will grow significantly at probably 13% CAGR over the next 7-8 years, and we should be around 3.5% of the world growth, world export market share. So all of, and I'm meaning, I think all this whole PLI link incentive in terms of setting up manufacturing in India and exporting out of India will make a meaningful contribution to increasing India's goods export in that sense. So at a very high level, meaning while budget is one policy statement, I thought, friends, I'll give you some high level overview in terms of how we should think about India's growth over the next 5-7 years. Meaning, just think about it, over the last decade, India's average growth 2010 to 2020 was 6.7%. And last 10 years, we did not have PLI scheme where government was giving incentive to set up manufacturing in India, which we have now across multiple sectors. Global companies didn't want to shift their production out of China, which they want to do now. And all the global companies want to have a manufacturing base in India because they want to reduce their dependence on China. Last 10 years, private sector was not investing, or private sector investment cycle was not there, which has now really started, and really started on a very strong note. All the major Indian companies are making or planning to make significant investments in the Indian economy to expand their capacity, because all of these companies are reaching their full capacity utilization or are at a very high level of capacity utilization, and they have to invest to create new capacity. Real estate sector was completely disrupted in the last 7-8 years because of new RERA bill, high real estate prices, higher interest rates, NBFC failures and stuff like that. Now, real estate sector the last 2 years has had the highest growth and will continue to have very strong growth given the strong job creation and strong consumer demand or user demand for new residences in India. And on top of that, we have a very strong consumption growth will continue as it continued in the last decade, will continue because of the strong new people joining the workforce and strong job creation in the economy. So in context of all of that, meaning I don't see any reason if last 10 years India's average growth was 6.7%, then over the course of this decade, why should it not be meaningfully higher than what it has been in the last decade? We've started the year post-COVID recovery on a healthy note, where even in the meaning current year will be the second year or first fully normalized year, because last year we had an impact of wave 2. So first full normalized year, despite a high base of recovery, we are doing 7% growth. Next year could be somewhat headwinded in terms of global economic challenges, but I still think that India can comfortably do 6.5% growth next year. But more importantly, I'm more optimistic or bullish on India's growth over the medium term. Once probably if global economies get into recession next year, and once they're out of recession the year after, there's no reason why India cannot do much stronger growth going into the next year. So that's broadly, friends, in terms of how I am thinking about markets and economy, and a very high level overview in terms of what we should expect out of the budget. Maybe I will take another few quick minutes to apprise you about some of our advisory portfolios that we have on the IFL platform, and then we can open the floor for questions. So as you all aware, friends, we have these advisory portfolios, and our advisory portfolios, I must highlight, are doing exceedingly well. In fact, they are beating most of the well-run mutual funds also. So they're giving far superior returns than mutual funds. And as you all know, in advisory, the entire your assets or your securities are held in your own demat accounts. You don't have to part away with your money. So we run an advisory portfolio called Core and Satellite, Alpha Core and Satellite. It's a portfolio where 70% of the portfolio is a core portfolio into high quality, high growth companies. And whereas 30% of the portfolio is a tactical portfolio where we take, where we hold those companies for 6 to 12 months and do regular profit booking into those companies. And if you look at it, the portfolio is a multi-cap portfolio with about 25 odd stocks, and the portfolio has done phenomenally well. Last 1 year, the portfolio is up by 20% versus Nifty 200 index, which is up by just 3.6%. So in a year where last year, when January 2022 to December 2022, when the Nifty index was 3.6% because markets were challenged, this portfolio did 20% return. And which is what the beauty of Indian markets is, that it's a stock pickers market. If you invest into right businesses, right stocks, irrespective of the index, you can make very healthy returns, which is what core and satellite portfolio has done. And likewise, on a 2-year basis, the portfolio has done 27% CAGR returns versus 14.9% or 15% for the index. So returns which are far, far higher than what the index has done, even on a 2-year basis. These are top 5 holdings of the portfolio. Again, some of the most well-known names, because the portfolio invests into largely blue chip companies or very good quality, high quality companies, and yet it has done a phenomenal returns from an investor's point of view. The another portfolio, advisory portfolio that we have is what we call the dynamic thematic portfolio. So the idea with this portfolio is simple. Every few years, the portfolio selects a theme and invests into companies that fall under that theme. So again, last year, this portfolio has done phenomenally well versus a 3.6% returns, which the index has done. This portfolio has done close to 19%, 18.8% returns.
Excuse me, sir. Sorry to interrupt. Sir, slides are not getting changed.
Oh, is it? 1 second. 1 second. Is it visible now?
Now it is visible.
Yeah. Okay, sorry. My apologies, friends. So dynamic thematic portfolio has done on a 1-year basis 18.8% return versus 3.6% return at the index level. And from the time the portfolio was launched, which is June 21, it has done 31% CAGR return versus the index return of just 10%. So it's delivered a very, very strong outperformance over the index. Currently in the fund, we are running a simple theme, what we call growth in income, because our view is that because of high inflation, India is a growth economy, so we need to invest into growth stocks, but also we need to have some stocks with high dividend yield and income generating assets within the equities because of the high inflation, and which is what the portfolio has. So again, it's a multi-cap portfolio, but a portfolio of very high quality blue chip companies. So the point I was highlighting, friends, is macro events will keep happening, like rising interest rates, inflation. All of these are cyclical things. So inflation and interest rates are always 1-year, 2-year phenomena where they rise sometime, they fall sometime, and they'll keep going through cycles. And it is the job of central banks to manage that and manage the economy well. For what is relevant for us as investors is, in every cycle, we have to invest into right set of businesses. And given the high growth nature of Indian economy, if we invest in right businesses, then irrespective of the macro cycle, as long as markets are stable, we can make very healthy returns. And which is what exactly our portfolios, advisory portfolios, have been able to do. So as I showed, dynamic thematic portfolio last 1 year has done 19% returns, and almost 18 months has done 31% CAGR returns in that sense. And I'll quickly share with you, since it could be seen, I share with you the portfolio of the previous fund as well. Once again, since just allow me a moment, and then probably we can open the floor for questions. So again, this is the core and satellite portfolio I was talking about, friends, where I said 70% of the portfolio is a core portfolio into high quality company with a long-term buy and hold strategy. And the balance 30% is a more tactical portfolio with where we keep doing regular profit booking in 6 to 12 months, but again, invest into very high quality companies. So last 1 year, this portfolio has done 20.1% CAGR return versus 3.6% on the index. And 2 years, it's done 27% return versus 15% in the index. So if we invest in right set of companies, the point I wanted to make was we can deliver, we can generate returns which can be significantly higher than what the index can do. While staying invested into high quality growth oriented companies, which is what exactly we do with our portfolios. Both these portfolios are live on the IIFL Securities platform. So you can consult your advisor at IIFL Securities and buy this portfolio. Since these are advisory portfolios, the securities or the assets will remain in your own account. And the execution of the trade will also happen in your own account with the help of your advisor at IIFL Securities. So I thought I'll give you this brief on our advisory portfolios. With this, I'll take a pause and we can open the floor for questions so that we can make it more interactive and probably answer the questions that you all might have. So, Viral, with that, I'll take a pause.
Yeah.
Anything else, Viral, you would like me to touch upon, or we can open the floor
No,
for
almost
questions?
you have covered everything. So in case any of our partner clients have any questions, you can please write your questions in the Q&A box. We will take your questions one by one. I repeat, any friends who are willing to ask any questions to Pankaj sir, please write down your questions in the Q&A box. We will take your questions one by one. I have seen some irrelevant questions pertaining to this webinar. I will just avoid those questions to incorporate the best of the questions available. Mr. Kedar, you want a presentation? Definitely, Mr. Kedar will work on that part, and hopefully you can get in touch with your relationship manager to get the presentation. Sir, we have one question pertaining to portfolio rebalancing. The question is from Mr. Hemal Vora. Why there is frequent portfolio rebalancing in the prime portfolio recently?
In the prime portfolio, see, okay. See, friends, our overall portfolio turnover ratio on an annual basis is very low. First of all, yeah. So we do not do portfolio rebalancing just to create turnover. That's not the idea. In fact, you see on a full year basis, our portfolio turnover ratio is at par or is at lower than some of the best mutual funds. Because I know you don't get to know what is a mutual fund portfolio turnover ratio in mutual funds, but I am aware of that. And with that basis, I'm saying that it is at par or lower than some of the best mutual funds. Having said that, recently, see, now we are start of a new year. As I said, this year, a lot of macros are changing significantly. So last year, as I said, was about rising rates. This year is going to be about declining rates towards the second half of the year, or towards peak interest rate. Last year was rising inflation. This year now, inflation has started decelerating and it started falling, and it will continue to decline all through this year. So when the macro environment changes, friends, companies or sectors which are doing well in rising interest rate and rising inflation environment are not the companies which will do well when interest rates are falling or when inflation is falling. So then we have to make adequate or appropriate changes to our portfolio. Otherwise, our portfolio will underperform. So we are taking that call and we are repositioning our portfolios. And when we reposition, because we want to reposition for this year, right? We want to prepare for it that by March, we think central banks will stop raising rates. And then towards the end of the year, high probability they'll cut rates. Last year was strong growth in US. This year will be US recession. So all of these things that were there last year are changing this year or are reversing this year. So then we cannot, if we own the same portfolio, do not make changes, then that portfolio, if it did well last year, it will not do well this year, because this year is opposite of last year. So we need to make changes, appropriate changes to the portfolio. And if that is the case, then we have to rebalance the portfolio. The point I'm trying to make is we rebalance the portfolio on a more objective basis. We don't do it just for doing some activity. That's never the objective. We are very fundamentally focused and very committed to our portfolios, and we are fundamental investors. So we have to make sure that we are owning fundamentally, after deep fundamental research, we invest into companies, and we have to make sure that we're owning the right companies. So we'll do it only when it's required and to position our portfolio for the future. Because stock market is all about future, discounting the future, not the present. Because whatever is present is known to everyone and is already priced into the market. So which is why you would have seen we are taking strategic review of the portfolio and we are repositioning our portfolios. And if the world is changing, then we have to change our portfolio. And which is why there's been activity in the portfolio over the last month or so, and then this month. Yeah.
Thank you, sir. So we have couple of common questions. What are the portfolio management charges for each portfolio? I'll answer those questions. The portfolio management charges are 2.5% on annualized basis. Ticket size for the advisory portfolio, the ticket size is 2.5 lakhs to 3 lakh rupees. Sir, one question for you. Which themes or sectors are you bullish on India for 2023?
Okay, good question. So, friend, I am very bullish on on engineering and capital goods as a sector, because I think after a gap of almost 10 years, we are seeing revival of investments in India. So you look at companies like, for example, in our portfolios, you own companies like ABB, Siemens, Cummins. I'll give you an example. 2 months back, Siemens received one single order of 30,000 crores to be executed over 10 years from Indian Railways. Now, this is the largest ever order received by any one single company from Indian Railways ever in the history. And likewise, all the large corporates of India, let's say across the steel sector, all the steel companies in India, Tata Steel, JSW Steel, ArcelorMittal, SAIL, Steel Authority of India, they are all on a big expansion plan, and all of them have investment plans which run into, between 1 to 2 lakh crores over the next 7-8 years. This is only steel as a sector. Then there is aluminum as a sector. Then there is coal as a sector. Across all the core industries, then there is cement as a sector. Across all the core industries, massive investments are happening in India. And if all of these companies want to set up new plant, new facility, upgrade their plant, then they'll have to make investments, and which effectively means new orders for engineering companies, because they are the companies which will set up these plants and create this infrastructure. So last year, in fact, engineering capital goods was one of the best performing sector, because most of the stocks are up between 20 and 50% in a market which was flat. And I think I continue to remain bullish on that sector. And apart from that, I am bullish on healthcare as a sector, or pharma as a sector for this year. It's a sector which has not performed in the last 3 years, but I think this year the sector will recover, and from this year onwards, the sector will start performing. So I find a lot of value in the pharma sector.
Thank you, sir. So we have a question. Do we see FII inflows going to China once the economy reopens? And it would be how it would be affect our market? Does it affect positively, negatively, or it would be neutral to that extent?
Good question. You're right. In the short term, Chinese markets are very cheap. The index versus India, where the index is trading at 20 to 23 times, China index is trading at now about 11, 12 times, because it's been beaten down so badly. So Chinese stocks and Chinese markets are extremely cheap. Because of reopening in the short term, some flows can go there, because there'll be a bounce in the market. And already Chinese market last 3 months are up by 30%. So there's a strong bounce on the reopening, because as things reopen, there'll be strong resurgence or strong pent-up demand that will emerge in China across sectors. So that can happen in the short term, but I think after whatever Chinese government has done with their technology companies and their flip-flop on policies and their interference into internet companies there, like with Alibaba and all of that, all the global investors realize that you cannot invest into China on a long-term basis. You have to be very careful with government, because government can interfere in any company, any business at any point of time. So while in the short term, some money can go to China, but long term, I think investors wanting to invest for the long term, wanting to take a long-term view, all of that money will come to India, because they don't have any other choice. So I don't feel that India will get impacted because of some money going to China in the short term, friends.
Thank you, sir. So there is a question from Mr. Nikunj. Do you have any international stock in our portfolio?
No, Nikunj, I'm sorry to disappoint you, but for the time being, we don't have any international stock now.
Sir, my one more question to the same line is, can we have international stock in the portfolio? If I suppose I does not
see, the problem is we can buy it, but investors have to execute. Some of these investors might not have that capability to execute.
right.
So which is why we are avoiding that.
Okay, thank you, sir. Sir, your view on three sectors. One is paint sector and insurance sector, specifically life insurance and general insurance.
See, paint is a great sector, but that does not mean paint companies will make money. All the paint companies are very, very expensive. And I don't think so they will make, they are good companies, they're great companies, but the stocks are so expensive that I think the returns in the sector will be very modest, and they will continue to keep going through a time correction as has been the case in the last 2 years, where paint companies have not made any money for the last now almost 2 years for investors, and I think that will continue because these stocks are still very, very expensive. Insurance, life insurance, general insurance, great growth sectors by the right companies, these companies can deliver mid-teens kind of a return on a long-term basis. So they're good companies to own for a longer term period.
We have a question. Budget impacting stocks and or companies can be dealt before the budget, and probable direction of the market after budget due to inflation, if any.
See, budget policy announcement will have impact on companies and stocks, and we have to look at the long-term implications. Don't try to play around the budget that 3%, 5% move on the budget day or one day before or after that, because these are very short-term behavior of the market. Overall, I think it will be a positive budget, it will be a disciplined budget, and it will be a growth-oriented budget, which will focus on this government. No, we have seen they have always focused on long-term growth of the economy, and they've tried to do structural reforms. For example, Aadhaar, for example, this UPI payment where all of us now use GPay or PhonePe or Paytm to transit money. Digital payments is what this government has done. They brought a IBC bill, so now there's banks can take companies to IBC court and make sure that there'll be no huge pileup of NPA in the banking sector. So they focus more on strategic reforms, let's say PLI, production linked incentive, and all of that, so that long-term growth can be much higher in that sense. So I think don't focus on the companies from a very short-term perspective. Longer term, I think infra companies, capital goods, railways, roads, export-oriented companies, manufacturing companies in India should be a big beneficiary, because government will give more incentives. Government will invest more amount, as I said, in roads, railways, ports, and all of these sectors. Government will give more incentives for setting up manufacturing in India. There will be more emphasis on textile exports out of India, because textile is a big sector in the economy, and India has a very huge advantage versus a lot of other economies in the world in textile manufacturing. The capabilities we have, it's a sector which creates huge amount of jobs. So I think there will be further thrust to promote on accelerate and grow India's textile export. We should become the largest textile exporter in the world. Why should we not? Right? And we will, I think, over a period of time. So all of these sectors will benefit big time out of the budget. As far as inflation is concerned, see, it's very much now in control. We don't have problem like Western world where target is 2%, inflation is 7%. Our target is 6%. Current inflation is as 5.7, 5.8%. So we are in a comfortable situation. So I don't see that will have much of an impact.
Thank you, sir. How do you see IT sector's performance for the financial year?
I think last year was a big underperformance in IT sector. All of us know large cap IT stocks are down anywhere between 15 to 30%, and mid caps are down anywhere between 20 to 40%. So I think this year is a year probably to invest into IT sector. Valuations now have corrected; they become much more reasonable. So one should start gradually. Don't invest at one go. Try to invest into sector gradually, in bits and pieces, because the first half of this year will still be slow in the IT sector because of the recession in US and Europe. But probably second half of this year or next year should be a great year for IT company. So this could be a year to accumulate IT stocks slowly and steadily.
So there's one question pertaining to rebalancing. I'll just read out the question. Client is facing a serious problem while rebalancing. While rebalancing, additional amount is debited from the ledger. Due to this, client has to put some more money while rebalancing. If you don't mind, I would like to answer this question.
Yeah, please, Viral, please go ahead.
So what happens, friend? Say example, a portfolio value is say 1,000 rupees, and there is a fund rebalancing to be done for say 100 rupees. For rebalancing of 100 rupees, say probably one or two stocks to be changed to different two stocks. In that scenario, what happens is, like, say example, fund manager is asked to sell goods worth 100 rupees and buy goods worth 100 rupees. What happens when you are selling the goods worth 100 rupees as per the SEBI norms? You don't get entire 100 rupees on the same point of time to reinvest. Assuming you are getting only 80 rupees to reinvest at that point of time, your 20 rupees is additionally getting debited for your fresh purchase of 100 rupees. And once a day or two later, once the original 20 rupees will get reflected in your IFL ledger. I hope I have been able to make you understand. If still you have any questions pertaining to the ledger understanding, you can get in touch with your relationship manager. They can help you to understand it better. Thank you. Sir, one of our client, Rita Jain, is asking for some engineering company which you are interested or which you like.
Uh, we own Larsen and Toubro, we own ABB, we own Cummins, we own Siemens. So I'm actually take a 3-year view and I'm positive or bullish on all these companies. And we own all of them in our portfolio. We also own a mid-cap company called Kalpatru Power. I'm positive on that company also. So I'm telling you that what we own in portfolio. So obviously, meaning you can meaning there's a caveat that I have a bias because we own these companies. But having said that, I am positive on all these companies and we own them in the portfolio, and we think they will have strong growth over the next 3 years. And they are good companies managed by very well managed companies by one good and competent management teams and owners.
Thank you, sir. Sir, we have a question. What is your view on ESG or sustainability, reflecting to say green hydrogen, ethanol, and which companies will be the key beneficiaries?
See, friends, that's the future. So the world will have to move to clean energy, which could include ethanol, green hydrogen, gray hydrogen, and other sources of clean energy, including solar, wind, and all of that, because all of us understand the consequences that we've been living through by burning more fossil fuel, how we are hurting the whole world, the whole planet, and all of that. So I think that all of these new technologies and clean energy is the future. There are a lot of companies are big beneficiaries of that. Reliance is making a huge investment into green hydrogen and clean energy. So I think 5 years out, Reliance will become a big player in that. There are a lot of companies on the engineering and capital goods side which are executing these kind of projects. So, for example, Cummins is doing projects. They have the technology to set up. If someone wants to set up a green hydrogen plant, then Cummins can set up that for them. Cummins actually did set up one plant for, I think, Gale, I think, recently. Likewise, I think another company which set up plant for some company set up a plant for NTPC also. I'm not able to recollect which company had set up that. So Cummins, for example, I know for sure that they have green hydrogen capabilities. There are a few companies which are manufacturing ethanol, and now we have increased the ethanol blending into our auto fuels to 25% in our petrol and diesel to 25% to make it much more cleaner and all of that. So there are companies, a lot of sugar companies, including which manufacture ethanol. So yes, all of these companies have a very bright future over a longer period of time.
Thank you. Sir, we have one question from Mr. Vishwas. What is your outlook on gold in the medium term? Would you like to take any such precious metal in your portfolio?
Okay. So one, I'm not an expert on gold, but I'm sharing my view with you, Vishwas. I think next year will be the year where gold will deliver healthy returns, because this year, because of the increasing rates, and we had a stronger dollar. So stronger dollar is anti gold, and gold is the opposite of weak dollar. So I think the moment Fed goes on to a pause or stops raising rates, dollar will weaken, and if that will mean gold will do well. So I think this year gold should do well. So if you ask me, I would, meaning I don't invest into precious metals, but otherwise I would go and invest in gold. One, we do not invest into precious metals in our portfolio because currently, Vishwas, we are just running equity portfolio. Some point of time, we'll launch multi-asset class portfolios where we'll play across asset classes. But at this point of time, our portfolios, are only equity. First thing is to get investors. आज क्या हो रहा है ना, आज हम क्या सॉल्व करने की कोशिश कर रहे हैं, हम ये सॉल्व करने की कोशिश कर रहे हैं, हम इन्वेस्टर को ये बोल रहे हैं कि आप खुद अपनी मर्जी से ट्रेडिंग कर रहे हो, या आप स्टॉक में इन्वेस्ट कर रहे हो जिसमें आप प्रॉपर रिसर्च नहीं कर रहे हो, और आप खुद अपने मन से या कहीं टीवी पे सुन के या कहीं किसी फ्रेंड से या कलीग से एडवाइस लेके आप कुछ भी स्टॉक ले लेते हो, फिर आप उसको ट्रैक नहीं कर पाते हो और उसमें आपका लॉस हो जाता है। तो ये एडवाइजरी पोर्टफोलियो एक ऐसा प्रोडक्ट है जिसमें आपको एक एक्सपर्ट आपके साथ जुड़ गया है और आपको खाली उसका पोर्टफोलियो फॉलो करना है। तो पहले हम उस चीज को सॉल्व करने की कोशिश कर रहे हैं, एक बार उसमें थोड़ी हमें सक्सेस मिले जहां पे हम अच्छा पेनिट्रेशन कर पाए, ज्यादा से ज्यादा लोगों को समझा पाए, फिर वी विल डू मल्टी एसेट ऑल्सो। बट पहले हमें, बिकॉज हम क्या चाहते हैं, व्हाट वी वांट ऑल स्मॉल एंड रिटेल इन्वेस्टर्स टू मेक मनी इन इंडियन इक्विटी मार्केट। वी डोंट वांट, इफ यू आस्क मी पर्सनली, मुझे बहुत दुख होता है, मुझे बहुत खराब लगता है जब छोटे इन्वेस्टर, स्मॉल इन्वेस्टर, रिटेल इन्वेस्टर स्टॉक मार्केट में पैसा लूज करते हैं। हमारी कंट्री है, हमारा देश है, फॉरेनर्स हमारे यहाँ पे इन्वेस्ट करते हैं, पैसा बनाते हैं, और हमारे लोकल लोग, इंडियंस लोग पैसा लूज करते हैं। तो मुझे बहुत खराब लगता है, मुझे बहुत सैड फील होता है। ये एडवाइजरी पोर्टफोलियो बिकॉज ऑफ सेबी के लॉ और टेक्नोलॉजी की वजह से एक ऐसा प्रोडक्ट मिला, तो हम लोग ने इसको हम लोग इस पे लैच होकर हमने एक प्रोडक्ट पोर्टफोलियो लॉन्च किया। हमारा ऑब्जेक्टिव है कि हम इंडिया के छोटे से छोटे इन्वेस्टर के पास ये पोर्टफोलियो लेके जाएं और उसको बोले, अगर आपके पास टाइम नहीं है रिसर्च करने का, तो आप खुद अपनी मर्जी से इन्वेस्ट मत कीजिए, क्योंकि आप गलत स्टॉक में इन्वेस्ट कर देंगे या सही स्टॉक में इन्वेस्ट करेंगे तो आपको पता नहीं है कि अगर आपने ले भी लिया तो उसको कब बेचना है, और आप उसको रिसर्च नहीं कर रहे हैं, ट्रैक नहीं कर रहे हैं, तो वो सब हम करेंगे आपके बिहाफ पे। और आपको खाली हमारी एडवाइस फॉलो करनी है, वो भी बहुत सिंपल है, 1 या 2 क्लिक में आपके एग्जीक्यूशन हो जाते हैं, और आपके स्टॉक्स जो है सब आपके अकाउंट में ही रहते हैं। तो आपका एसेट्स आपके पास ही है, खाली आप किसी की एडवाइस से कर रहे हो, अपनी मर्जी से करने के बदले। तो पहले ये थोड़ा अच्छे से सॉल्व करते हैं विश्वास, एंड देन वी विल लॉन्च मल्टी एसेट क्लास प्रोडक्ट्स आल्सो, और उसमें वी विल लुक एट इंक्लूडिंग सम ऑफ दीस अदर प्रोडक्ट्स इंक्लूडिंग प्रेशियस मेटल्स आल्सो।
Thank you. There's one connected question once again from Mr. Vishwas. For next 5 to 7 years, will will it be reasonable to expect a CAGR return of 15% from core and satellite portfolio?
Yes, 100%. Objective is to do more than that, but at least उतना तो expect करना ही चाहिए 100%। मतलब if we are not doing that, then मतलब we have not done a good job। 100%, that is the objective, Vishwas, without a doubt।
Thank you, Vishwas, for this question. So we'll take another few more questions before we wind up for the day. Sir, how do you select top companies for investment? Please brief shortly, few points, 5-7 points, in the sense which you check in the fundamentals and the price level. Stock picking style sir आपका।
अभी ये तो आप मेरे से पूरा मतलब, चलो मैं कोशिश करता हूँ। देखिए बहुत कुछ देखना पड़ता है, पर अभी आपने बोला टॉप 5-7 पॉइंट्स, तो मैं टॉप 5-7 पॉइंट्स बता देता हूँ। एक, हम सबसे पहले देखते हैं कि कंपनी जो है उसके जो मतलब वो एथिकल कंपनी है कि नहीं है, और उसका जो मैनेजमेंट है वो एथिकल है कि नहीं। मतलब कॉर्पोरेट गवर्नेंस जिसको बोलते हैं ना, कि हमें कोई कंपनी में जब हम शेयर लेते हैं तो हम उस कंपनी के ओनर बन जाते हैं, तो हमारी पार्टनरशिप हो जाती है उस कंपनी के जो मेजोरिटी ओनर है, जो प्रमोटर है, उनके साथ में। तो लाइफ में जब भी पार्टनरशिप करना है, अच्छे लोगों के साथ करो, खराब लोगों के साथ मत करो। तो हम एक कॉर्पोरेट गवर्नेंस देखते हैं कि कंपनी के जो मैनेजमेंट है वो क्लीन है कि नहीं है, एथिकल है कि नहीं है, और कॉम्पिटेंट है कि नहीं। तो ये पहले मैनेजमेंट क्वालिटी चेक करते हैं। फिर एक हम कंपनी के व्यू, बिजनेस पे व्यू लेते हैं कि बिजनेस किस टाइप का है, बिजनेस मतलब कितना प्रॉफिट करता है, कंपनी के क्या स्ट्रॉन्ग पॉइंट्स हैं, और ग्रोथ कैसी है बिजनेस में फ्यूचर में, और रिटर्न रेशियोज कैसे हैं, कैपिटल कितना एम्प्लॉयड है, फ्री कैश फ्लो कितना जनरेट करता है बिजनेस, आगे जाके ग्रोथ कैसी रहेगी। और एक बार ये सब चीजों का हमको क्लैरिटी मिलती है, और अगर वो सब अच्छी लगती है, फिर हम वैल्यूएशन देखते हैं, उसका पी कितना है, और आगे जाके क्या ग्रोथ हो सकती है, कितना डिविडेंड देती है कंपनी, और कितनी शेयर होल्डर फ्रेंडली है, फिर ये सब चीज देखते हैं। तो मैंने एकदम ये तुम ब्रीफली आपको बता दिया, पर हम तो पूरे दिन यही करते हैं। ये काफी एग्जॉस्टिव एक्सरसाइज होती है इन टर्म्स ऑफ इन्वेस्टिंग, रिसर्चिंग एंड दिस थिंग। कम से कम भी 200 डेटा पॉइंट्स होते हैं जिसमें हम चेकलिस्ट करते हैं, या जो हम चेक करते हैं बिफोर वी इन्वेस्ट इनटू अ कंपनी। राहुल,
थैंक यू सर। Sir, last 2 questions we'll take. What is your view on specialty chemical companies in 2023? Are you bullish on this kind of a sector? And how would you suggest bottom up stock picking year?
सो यू एब्सोल्युटली राइट, स्पेशलिटी केमिकल में बॉटम से भी स्टॉक पिकिंग करना है। मुझे लगता है लास्ट ईयर वाज, सेक्टर ने लास्ट 6-7 साल में बहुत अच्छा किया, बट 2022 वाज अ बैड ईयर फॉर द सेक्टर, बिकॉज सब कंपनीज के वैल्यूएशन बहुत ज्यादा हाई थे, एंड वो वैल्यूएशन करेक्शन भी हुआ है, और उनके परफॉर्मेंस भी, बिकॉज ग्लोबल में कमोडिटी क्राइसिस जोर से बढ़ गए, तो उसकी वजह से एडवर्स इंपैक्ट भी हुआ है कंपनीज को। तो मुझे लगता है ये साल में जाके उनकी अर्निंग स्टेबलाइज होगी। तो लॉन्ग टर्म अगर आप मुझसे पूछें 5 साल 10 साल के व्यू से, तो व्यू पॉजिटिव है, पर आई विल वेट बिफोर वी इन्वेस्ट इन दीज कंपनीज। कैसे इन्वेस्ट करें? एज द नेम सजेस्ट कि स्पेशलिटी केमिकल, तो मेक श्योर कि क्या होता है कि बहुत सारी कंपनी कमोडिटी केमिकल्स बनाती है और वो क्लेम करती है कि हम स्पेशलिटी केमिकल्स है, तो वो क्या प्रोडक्ट बना रही है ना, उसको समझना बहुत जरूरी है कि वो प्रोडक्ट कोई और कंपनी भी अगर आसानी से बना सकती है तो फिर वो स्पेशलिटी केमिकल नहीं हो, वो कमोडिटी केमिकल हो गया। कंपनी के पास वो जो केमिकल बना रही है उसमें ऐसा क्या यूनिकनेस है कि वो कंपनी बना सकती है खाली, और या वर्ल्ड में कुछ एक ही कंपनियां वैसी बना सकती है, वो प्रोडक्ट हर कोई कंपनी नहीं बना सकती। जब ऐसा प्रोडक्ट आपके हाथ लग जाता है केमिकल्स में, देन उसमें क्या होता है कि आप जब सेल करते हैं उसको तो आप अपना प्राइस डिमांड कर सकते हैं। तो इसलिए उसके प्रोडक्ट को और उसके बिजनेस को समझना बहुत जरूरी है बिफोर वी टेक अ व्यू ऑन दैट।
Thank you, sir. We'll take the last question for the day. Sir, your view on new tech or internet-based companies or data analytic companies like Root Mobile, FL, Naukri, Latent View.
See, friends, long-term perspective, I am very bullish on internet tech as a sector. That does not mean every company in the sector will succeed. हर सेक्टर में कुछ कंपनीज हमेशा फेल होती है, हर सेक्टर में अच्छी कंपनी और खराब कंपनी होती है। तो फर्स्ट ऑफ ऑल इट्स इंपॉर्टेंट कि हम सब कंपनियों को एक समान नहीं समझे, और उन सेक्टर बुलिश है, जैसे इंफ्रा में कुछ अच्छी कंपनी है, लार्सन अच्छी कंपनी है, पर कुछ खराब कंपनियां भी है, बहुत सारी इंफ्रा कंपनी खराब कंपनियां भी है, जयप्रकाश खराब कंपनी थी, फेल हो गई। बैंक्स में एचडीएफसी बैंक अच्छा है, यस बैंक खराब था इसलिए फेल हो गया, उसको वापस रिवाइव कर रहे हैं। तो हर सेक्टर में अच्छी बुरी कंपनी होती है, वी हैव टू डिस्टिंग्विश बिटवीन गुड कंपनीज एंड बैड कंपनी। हाउसिंग फाइनेंस है, एचडीएफसी बेस्ट कंपनी इन हाउसिंग फाइनेंस, दीवान हाउसिंग बैड कंपनी, फेल हो गई, बैंकरप्ट हो गई। तो हर सेक्टर में अच्छी और बुरी कंपनी होती है, which we have to distinguish, and we have to make sure that we are investing in good companies also. So first, very point, sector, I am very bullish. Specific stocks you mentioned, I am positive on Naukri. I am actually very bullish on Naukri. FL, Latent View, to my mind, are good companies. Valuations are very expensive, but they're good companies. Root Mobile, I have a negative view. I have a negative view. So मैंने मेरे views आप लोगों को एकदम openly बता दिए हैं। बट मेरा एक रिक्वेस्ट है, आप लोग स्टॉक स्पेसिफिक पूछते रहते हैं इसलिए मैं बताता रहता हूँ, पर कोई भी स्टॉक पे एक्ट करने के पहले आप अपना रिसर्च जरूर कीजिएगा, बिकॉज डोंट मतलब यूज योर जजमेंट एंड डू योर रिसर्च। बट मेरा व्यू आप लोग पूछ रहे हैं तो मैंने बता दिया। एंड lot of these companies which I talk about, at times when I say we are positive, we also own in our portfolios. So to that extent, we have a vested interest also, friends.
Thank you, sir. Thank you very much for your precious time. We have answered patiently all our small and important questions, and we wish you good budget for your coming and upcoming for everybody else. And let us meet post budget once again. Humble
Sure,
request.
definitely. Thank you, Viral, and thank you, friend. Viral, I have a small request.
Yes,
I
please.
can see a lot of questions which are still unanswered. What we can do is, you can send a mail of all these questions to us, so we can reply those questions, and then to the respective person, we can send the reply back to them. So at least we will make sure that all the people who ask their question, they get answers to their question.
Agreed. So I will arrange all these questions which are not answered. I'll get back to you on the email, and then we'll circular all these answers back to them.
Back to the respective, because I'm sure your tech team will help able to identify the person who asked the question. So we will answer the questions from our end, and then you can send the reply back to the respective person or client who has asked the question.
Sure. This will help us. Thank you. Thank you very much.
Thank you, friends. Thank you, Viral. Thanks a lot, IFL, and thank you, friends, for taking a valuable time out and joining us this evening. I hope we could answer most of your questions. Yeah.
Have a great evening, sir.
Thank you.